Hello, and thank you for joining us this very frosty morning here in Maryland. Hope everybody is doing well. Welcome to the Maryland Apex Accelerator webinar. I'm your host, Yasmin Razak, and I'm the Marketing and Training Coordinator here. Today, the topic is size and affiliation issues. Is your small business actually small? And it is led by Matthew Schoonover, who is the founder and managing member of Schoonover and Moriarty LLC. We'll get started shortly, and there will be opportunities for you to ask Matthew your questions by typing them in the chat box on your screen. And we will try and get to as many of your questions throughout the next hour. As always, a copy of the slides will be emailed to you, and I do have to let you know that this is being recorded and will be available later on. If you need assistance from the Maryland Apex Accelerator, please get in touch with us by completing our client form on our website, marylandapex.org, and we will assign a counselor to work with you. Okay, good morning, Matthew. The floor is yours.
Well, good morning, Yasmin. It's a pleasure to be back with you here after. Sorry, let me see if I can get my video working here so that it's a little more formal. It's a pleasure to be back with you guys. Yasmin and I were speaking before everybody joined in the webinar, and it's been a while since we've had the opportunity to reconnect with one of these presentations, and I'm excited today to talk about really an issue that I think it's important for every small business to be aware of, and that is, how do you make sure that your business is actually small? I mean, obviously, understanding the size considerations and different affiliation considerations is really going to be important for your business as it seeks to do more and more work with the federal government, because there are a lot of opportunities out there for small businesses, and in order to qualify for them, you need to make sure that your business is certainly actually a small business. So we'll talk about how SBA, the Small Business Administration, calculates business size and how it determines the size for small businesses. As Yasmin mentioned, I am the managing member of Schoonover and Moriarty. We are a Kansas City-based law firm. It is chilly here this morning, too. We are a Kansas City-based law firm that works exclusively with federal government contractors. And so we are very adept at handling these issues and helping businesses understand issues relating to their size. The point of this slide is actually the small text at the bottom. It's not to show you my face, but even though we are talking about some legal issues today, please, please, please don't take today's presentation to be legal advice. If you have specific questions, I'm happy to answer them or refer you to somebody else who can. I know Yasmin and her team are very adept at answering some of these questions as well, but please don't take today's presentation to be legal advice. I also wanted to give a quick plug for our blog, govconbrief.com. On GovConBrief, we write about a lot of these topics, and as the name implies, mercifully, the posts tend to be pretty brief. We focus our posts on really trying to educate small businesses and their owners or their managers about a lot of these issues. So if you haven't checked out GovConBrief yet, I certainly would encourage you to do so and hopefully make it a resource for you going forward. So today we'll just a quick roadmap on kind of today's discussion. We'll talk first about why being a small business is a big deal to the federal government and the opportunities that come along with it. Just as that kind of baseline understanding of, quite frankly, why this matters. And with that understanding, we'll then transition to, how does SBA determine whether you're actually a small business, including the dreaded A word, affiliation between businesses, and how SBA might find two businesses to be affiliated and the consequence of such an affiliation on business size. So we'll conclude by talking about that, as well as ways to kind of protect against affiliation between companies. So let's go ahead and break down into it and start off with why being a small business matters. And the answer really is, at the end of the day, it's money. You know, the federal government every year contracts more than $500 billion. It's probably approaching more of $1 trillion than it is $500 billion. But each year, the government spends an enormous amount of money on federal government contracts. And the Small Business Act, which was passed by Congress and signed into law, sets goals for small business participation. It says that of those contracts that the federal government awards, at least 23% should go to small businesses. And there are further goals, sub-goals for various socioeconomic categories. But we see that when we talk about, just the amount of government spending that is out there on prime contract awards, the idea that small businesses might get a quarter of that contract dollars is certainly very enticing, and there are some very lucrative opportunities for small businesses that are out there. And we see this reflected in the latest data. SBA every year collects data on and reports the government's how well the government is meeting those goals that are set by the Small Business Act. And we see here on the screen, this is we have 2023, which is the last year for which we have data available. 2024 data should be out sometime probably Q2 of next year. But we do see that in 2023, notwithstanding the fact that there was a 23% small business contracting goal, the government awarded closer to 30% of its prime contracts to small businesses to the tune of 178, almost $179 billion. And as every year we see federal government spending go up and up and up, that amount of dollar value assigned to small businesses tends to go up too. Every year, it seems the government is breaking last year's record for the amount of money in terms of dollars that are sent to small businesses for prime contract opportunities. But we also see on this slide a breakdown of the various socioeconomic categories that SBA has as well. The 8A or the Small Disadvantaged Business Program, WOSBs, Women-Owned Small Businesses, Service-Disabled Veteran-Owned Small Businesses, and HUB-Zone businesses all get a piece of the pie as well. The 8A program, if you can be an 8A contractor, there are a lot of benefits to being an 8A contractor. But among the socioeconomic programs, the 8A program really does get the vast majority of those dollars. We kind of see a couple of the programs where in 2023, the the goaling percentage or the percentage of contracts awarded didn't quite meet SBA's goals for those various socioeconomic programs, both the WOSB program and the HUB-Zone program. Nonetheless, still billions of dollars in opportunities for businesses that have any of those socioeconomic designations. So there really are a lot of opportunities for small businesses that are out there. But we also see it not only in terms of prime contracts, but also in terms of subcontracts, quite frankly. A lot of times, if an opportunity is not set aside for a small business, if it's an unrestricted or as sometimes it's called a large business procurement, then sometimes those programs might have subcontracting goals, or those contractors might have subcontracting goals that they need to meet. And there are opportunities for small businesses when it comes to subcontracting under federal government contracts. And again, we see billions of dollars reported going to small businesses as part of subcontract opportunities under a federal prime contract. And so there are a lot of, not only prime contract opportunities, but I also encourage small businesses to look at the subcontracting possibilities as well, because those can be, again, a very lucrative way to kind of break into the government market. Being a small business carries certain benefits. Of course, we just talked about contracting benefits. There are sole source or set aside opportunities for various small businesses in a set aside contract. Essentially, what that means is competition is restricted to that type of business. So if the government sets aside a contract for, or an opportunity, for example, to say a woman-owned small business, that means that only woman-owned small businesses are eligible to participate in that opportunity. And so it limits the competitive pool. And we see that with small business opportunities, 8A opportunities, SDV, OSB opportunities, or hub zone opportunities. So certainly having that small business designation and even a socioeconomic category designation really does limit the competitive pool and maybe increases your chance at receiving an award. Now, to have or to be eligible for any of those small business socioeconomic programs, your business does have to be small. That is, you can't be a large business and get a, service disabled veteran-owned small business status or woman-owned small business status. You have to be a small business, and the firm generally has to be small under its primary NAICS code. That is the NAICS code, North American Industry Classification System code, under which the business does the primary amount of its work. And so the first step in knowing whether you qualify for any of these SBA socioeconomic programs is to see whether you are a small business, because if so, that's the prerequisite to any of them. And I know certainly Yasmin and her team would love to talk to you about the various eligibility requirements for SBA's socioeconomic programs and the benefits for joining any of those programs, particularly as it relates to the government procuring items that are set aside or reserved for that type of business. So there are a lot of benefits under federal contracting, both prime and subcontracting, to being a small business. And so now that we know why it's important to be a small business, or why that might be a leg up competitively for you, now let's talk about how SBA actually determines that business size. And we're going to start again here with the NAICS code, the North American Industry Classification System code, that 6-digit code that is developed by the Census Bureau to describe each and every one of the economy's sectors and various industries. There's a typo on this slide, but various industries that exist in the North American economy, not just the American economy, but the North American economy. These codes are developed by the Census Bureau, with cooperation from Mexico and Canada to really develop codes for each of these industries. And as I mentioned, they're a 6-digit code. You can look at the NAICS manual, which is available on the Census Bureau's website, to determine, the industry sector and the specific establishment for each of those codes, and determine which code most closely corresponds to your business's primary purpose. It is possible to have more than one NAICS code for your business. When it comes to socioeconomic eligibility, we're going to look at your primary NAICS code, which, as I said earlier, is the NAICS code under which you do most of your work. Once the Census Bureau establishes those NAICS codes, then the SBA, the Small Business Administration, comes in and assigns size standards to each of these NAICS codes. And these size standards come in either of two flavors. For services, including construction, they're revenue or receipts-based, they're dollar-based size standards. But for manufacturing or supply-based NAICS codes, they're measured by the number of employees that a company has. So I mentioned, to be eligible for socioeconomic programs, you have to be a small business under your primary NAICS code. Now, in order to be eligible for a small business set-aside contract, or a contract that is set aside for any of the socioeconomic categories, you have to be a small business under the NAICS code that is assigned by the contracting officer to that solicitation. Under the FAR, the Federal Acquisition Regulations, the contracting officer is obligated to pick for each small business set-aside contract the NAICS code that most closely corresponds to the solicitation's primary purpose. And you can find that right there on the first page of each solicitation. And in order to be a small business for that solicitation, you have to be a small business under that assigned NAICS code. Now, I will say, as an aside, you can challenge the NAICS code designation for particular solicitations through what's called a NAICS appeal. Just know that if you want to challenge that designation, you have to act very fast. A NAICS appeal has to be filed within 10 days of the date the solicitation was released. And so it's a very quick process, very quick turnaround. But filing a NAICS appeal, if successful, I tend to think that NAICS code appeals are a really underutilized competitive tool, because if you're successful in changing the NAICS code, you can either become eligible for a solicitation you otherwise weren't eligible for, were it not for the change, or if you were to change the NAICS code to one that it has a smaller size standard, you might limit that competitive pool. And so there are some competitive advantages in some cases for filing a NAICS code appeal to challenge that NAICS code that the contracting officer has assigned to the solicitation. I mentioned that size standards come in receipts or dollar-based or employee-based. Receipts-based size standard, again, are for services contracts, including construction. And to determine receipts, SBA defines receipts as all revenue in whatever form received or accrued from any source, reduced by certain returns, very narrow returns and allowances. There are four kind of carve-outs to receipts, four very narrow carve-outs, but in general, it's all revenue that your company receives from any source. And there's a specific formula that SBA looks to when it goes to determine your receipts. It looks to your tax returns, and it says we're going to take a look at your total income and add it to your total income to your cost of goods sold, and that will give you your annual receipts as you report those items on your tax returns. Your total income added to your cost of goods sold gives you your annual receipts. And to calculate size, SBA does so under a 5-year rolling average. And so you'll calculate your receipts over the last 5 completed fiscal years. And if that average number falls below the applicable size standard, then you're a small business. But if it exceeds that amount by even $1, then according to the federal government, you're a large business. You might as well be Lockheed Martin at that point, because you're no longer a small business. Again, you do need to look to those tax returns. If they are filed, tax returns are determinative in determining your receipts. But if you haven't filed tax returns for one of the years, your completed fiscal year, then SBA may look to other information to include, your books, audited financial statements, might even look to, information from your accountant, a declaration from your accountant, to determine what those annual receipts are. And so you do need to make sure that you are keeping good books about your receipts as well. Importantly, if you are part of a joint venture, a small business joint venture, your receipts must include your proportionate share of joint venture receipts. You don't get to carve those out. You have to include your proportionate share of joint venture receipts. And we are seeing that being more and more of an issue in small business contracting, particularly as small business joint ventures become more and more popular for bidding on and winning some of these procurements. So total income added to your cost of goods sold. This is, I hope this screen doesn't give you trauma, but I wanted to show you, and this form's a little outdated, the 1120, you see it's year 2020, but nonetheless, I think it's the same. And this is just to show that if you file an 1120, SBA is going to add line 11 to line 2 from this form to determine your annual receipts. And yes, it is in addition. Some folks think that cost of goods sold should be excluded or subtracted from that calculation. No, under SBA's calculation, you are adding total income to cost of goods sold to determine annual receipts. File an 1120 short form, it's line 6 and line 2. If you file a 1065 for partnership, I believe it's line 8 in line 2. It kind of cut off there, but I believe for the 1065, it's line 8. That gives you your total income. So again, you're going to add those lines together to determine your annual receipts, and then calculate those for each of the last 5 completed fiscal years. Employee-based size standards are a little more straightforward. You're going to calculate the average number of employees for each pay period over the preceding 24 months. And so you do have to go through and calculate the number of employees for each pay period over the preceding 2 years under this calculation. And as you know, this is going to include any employee of yours. If they're employed on a full-time basis, if they're employed on an other basis, or excuse me, a part-time basis, or if you employ them from temporary or leasing agencies, they are included as well. That really the only folks that aren't included is if you have volunteer labor, which I'm not aware of a lot of manufacturing or supply industries that rely on volunteer labor. So that's kind of a goofy exception. It also does not include bona fide independent contractors, that is legitimate independent contractors. And I want to stress legitimate independent contractors, these 1099s that your business may use. Sometimes, particularly with small businesses, they have a tendency to classify individuals as independent contractors who may not actually be independent contractors. Rather, under state law principles, that person may actually qualify as an employee, which is, each state law is different, but a lot of it has to deal with the level of control that the business is exercising over that quote-unquote independent contractor. And if it's too much control, then that person may actually be properly qualified as an employee. So I say the calculation does not include bona fide independent contractors, but if you are using independent contractors in your basis or in your business, I would certainly encourage you to get with a local employment attorney to make sure that your bases are covered, so that you know that independent contractor is actually appropriately classified as an independent contractor. Because if not only could there be size issues that come up for a manufacturing or supply-based business, but if your business improperly categorizes somebody as an independent contractor, there could be tax consequences associated with that. There could be consequences from a pay and a benefits standpoint. So you really need to make sure your ducks are in a row if you do use independent contractors, regardless of if you are a manufacturing or a supply base or a services company or not. If you use independent contractors, again, I encourage you to reach out to local employment attorney to make sure that you're doing so correctly. SBA is going to determine size. It has to determine size based on a fixed date, because a company's size may change depending on the date. And so when we talk about small business set-aside opportunities, SBA is generally going to determine the business's size as of the date it submits its initial offer. That includes price. And there are some exceptions to this. In the case of complying with the non-manufacturer rule or the ostensible subcontractor rule, SBA is going to look to a final proposal revision in that case. And there are some other exceptions to this rule, but the general rule is the size is going to be determined for purposes of a small business contract as of the date the company submits its initial offer. That includes price. If you are small on that day, again, the general rule is that you remain small, considered to be small, for the duration of that contract, even if you were to organically grow outside of the size standard. So you're considered small for the duration of the contract, unless, in the case of natural growth, unless there's, again, some exceptions to this. If the contracting officer asks for size recertification in consideration or in connection with a specific order under a multiple award contract, then you need to be eligible as of, or you need to recertify as small as of the date of the requested recertification. If there is some type of acquisition of the company, some type of merger or sale, or any other type of contract novation, then in that case, recertification is required. But in general, if you are small as of the date you submit your initial offer that includes price, you're going to be considered small throughout the duration of that contract. And that's really important to know, because if you are kind of getting up there, if you're approaching your size status limit or the limit on a particular solicitation, excuse me, if say there's a bid due, first part of January, and your fiscal year runs with the calendar year, you might look at that opportunity and say, well, rather than submitting my bid on January 3rd, I'm going to go ahead and submit my bid on, December 31st, because that way, this year's receipts aren't included in that size calculation. So there's certain considerations that you want to keep in mind under the regulations, but knowing how and when SBA determines size is very important going forward. And with that, that's kind of the general rule when it comes to size, but it misses a real key consideration in determining a small business's size. That is, it's not only your size that SBA is going to consider, but SBA is going to add to your business, your size, the size of any affiliates that you might have. And so affiliation, as we're going to talk about, is essentially a size penalty. It can turn your small business into a large business, sometimes without you even knowing. We work with clients in response to size protests or pursuing size protests against other businesses. And affiliation is oftentimes one of those ways that a business may end up losing a contract because it's not considered to be a small business. So what is affiliation? Under SBA's regulations, it's essentially the power to control. One business has the power to control another business. In that case, SBA is going to determine that those businesses are affiliated. It doesn't matter whether that control is actually exercised or not. It's the power to control, having the ability to control, that matters for purposes of affiliation. It also doesn't matter if that control is positive or negative. And by that, I don't mean good or bad. I mean, whether positive control is if one company says, okay, other company, you have to do this, that company has to do it because it's being told affirmatively by somebody with the power to control it that it has to do it. Negative control, think of negative control as withheld consent. If a business wants to do something, but it can't do it unless one person signs off or another business signs off, and that person is withholding that consent, a lot of times that might equal to negative control, which could be a basis of affiliation. To determine whether affiliation exists, SBA is going to look to really the totality of the circumstances of the relationships between the parties, but there are some ways that SBA will determine under the regulations, real common ways that SBA will determine whether affiliation exists. The first is common ownership affiliation. And think of, common ownership is perhaps the easiest one to think about. If there's a person out there that owns 50% or more of two different companies, then those companies are going to be considered to be affiliates with each other automatically just by virtue of that ownership, that person's joint ownership, or their ownership of both companies. So if a single person owns 50% or more of companies, that's automatic affiliation. But a common ownership affiliation may also exist in the context of what I call kind of plurality ownership. If this was electoral politics, if nobody owns a majority of a business, then in that case, the person or the entity who owns the largest share may be deemed to control the business if that ownership is outsized compared to others. There's an example on the screen where if there's 3 owners own 30% each, and then 20 owners own 0.5% each, then those 3 owners will each be deemed to control the firm just by way of their outsized ownership. If there are 3 people who own 33% each, 33 1/3 each, they'll each be deemed to control the firm. But if there was, only one person who owned 30% and, there were 20 owners that owned together with, the remaining 60%, then that person who owns the 30% share would be deemed to be the controlling owner. And to determine this, SBA is going to give present effect to any type of stock options or agreements to buy or merge, even if they haven't been exercised. If there's any of those type of agreements out there, SBA is going to give them present effect in determining who owns what portion in the company. That's sometimes a way that people think that they can kind of get around this rule, where it's like, oh, I don't actually own this portion of the company. I have an option to purchase it. SBA is going to give that present effect and consider it as if it's been exercised in determining ownership. Common management. If 2 or more businesses are managed by, the same people or, some of the same people, then that shared management could give rise to a finding of affiliation. If 1 or more people control 2 or more businesses, SBA is going to look at that as a finding of possible affiliation between those companies. Identity of interest affiliation exists when, the business interests of companies or people are substantially aligned with each other. And there's really 3 main types. The first of which is, familial relationships, where people that have a close familial relationships, that is, parties that are married or parties to a civil union, parents and their children, or siblings. If you have any of those relationships and the other person owns or another business or controls another business, and your businesses do business together, I'm saying the word business a lot, but if there's a relationship between those companies, then SBA may find identity of interest affiliation based on that close familial relationship. Note that this doesn't mean that, if I have a second cousin who owns, a dry cleaning business, and I go there and get all of my suits for work dry cleaned. Yes, I sometimes wear suits, not today. If I go there and get all of my suits dry cleaned, that doesn't mean that they're going to find affiliation between the businesses. Rather, there has to be a close family relationship defined again as you're married or parties to a civil union. It's your parent or your child, or it's your sibling. You really have to have that close familial relationship in order for this type of identity of interest affiliation to be found. Economic dependence is if one business is economically dependent on another for a majority of its revenues or its contracts, SBA may find affiliation. And really, the danger zone, SBA is going to say if 70% or more of revenue comes from one business, then it may find economic dependence affiliation. I always struggle to say 70% because although that is the threshold that SBA identifies, I don't want people thinking that if they have 68 or 69% of their revenues coming from one business, that they necessarily wouldn't be affiliated with them. Rather, I kind of view it as, as you get closer to the 70% threshold, that you need to have a flashing yellow light that turns into a flashing red light pretty quick, to better understand the relationship with this other business and know whether you need to take steps to fracture that possible affiliation. Now, in some cases, somebody may come to me and say, hey, I'm a new business. I've been out there bidding on opportunities, but I have one contract. And so 100% of my revenue comes, through this subcontract. Does that mean I'm affiliated with, my prime contractor? In that case, maybe not, probably not. Where SBA recognizes that, if you're a new business, or if you've recently lost a contract and you're trying to find others, there could be exceptions to this rule. But again, just know that if your revenues are approaching kind of that 70% threshold, from one business or one source, you may be at risk of economic dependence affiliation, excuse me. Common investment affiliation, we really don't see this a lot, but if individuals have common investments that provide control, and here we're talking about actual individual common investments. We're not talking about mutual funds or anything like that. Controlling investments that are substantial in under the firm's or under the person's portfolio, that may give rise to common investment affiliation. But again, this is a very uncommon way that SBA actually finds affiliation. SBA may find affiliation in the context of a newly organized concern, or what I call a spin-off. If key personnel from one business spin off another business, and those two businesses continue to have relationships with each other, SBA may find an affiliation between those businesses. Now, they really do need to be key personnel, need to kind of be the higher up individuals that are involved in management, or really, kind of the key decision making of one of the companies. And generally folks that are middle management, or even kind of line employees, if they go off and form a new business, and that business works with their old business, generally that's not going to be enough to give rise to newly organized concern. Again, they kind of have to be the higher up management, and there really does need to be an overlap between those businesses where there is a relationship between them ongoing forward. Joint ventures may also give rise to finding of affiliation between businesses, and this is becoming more and more important, again, as we are seeing small business joint ventures becoming more and more popular. A lot of SBA OHAs, the Office of Hearings and Appeals, a lot of their decisions, their written decisions on affiliation lately, are having to deal with affiliation based on joint ventures. Now, the general rule is small business joint ventures are exempted from a finding of affiliation if they follow SBA's requirements. And that is, they meet the size requirements and they have a compliant joint venture agreement. To have a small business joint venture, each of the joint ventures either has to be individually a small business, or the parties have to be part of an SBA-approved mentor-protege agreement. And then they also must have a compliant joint venture agreement. And there are about 11 or 12 different requirements that are further or that are defined under SBA's regulations and are further interpreted through case law, that these joint venture agreements have to meet, and they have to be compliant for each opportunity that the joint venture bids on. And so I always tell folks, if you are bidding on an opportunity as a joint venture, you want to make sure at the outset that you have a compliant joint venture agreement. Please don't just take a joint venture agreement off the shelf and kind of change the names or change the procurement and assume it's good to go. No, these regulations change very frequently, and the interpretation of these regulations changes very frequently. And so to know whether your joint venture agreement complies, you really need to have it reviewed for each specific opportunity, and it does need to be in place before you submit your bid for those opportunities. So if you don't have a compliant joint venture agreement, it can mean that the parties are affiliated with each other for the contract and that they perhaps aren't eligible for that. Know that if you also have a long-standing joint venture, it can lead to general affiliation between the parties. SBA's regulations generally say that a joint venture cannot bid on new opportunities more than 2 years after it wins its first award. If it does, it's going to lead to a finding of general affiliation. Note that we're talking about bidding on new opportunities. We're not talking about performing contracts that have already been awarded or being awarded contracts that have already been bid within that 2-year period. We're talking about bidding on new opportunities. So know that there are some restrictions there for folks if they do form a joint venture. Now, there is a way around this under SBA's regulations, and that is simply to form a new small business joint venture that can bid on these opportunities. And so there are ways around this rule, but just know that if you have a long-standing joint venture, it can lead to affiliation between the joint venturers, which of course would defeat the purpose of the small business joint venture. Ostensible subcontractor affiliation. This only exists in the context of prime sub teams, and we are really kind of seeing ostensible subcontractor affiliation be, I don't want to say minimized, but really restricted in some of the case law. Under the regulations, ostensible subcontractor affiliation may exist if the subcontractor performs the contract's primary and vital requirements, or if the prime contractor is otherwise unusually reliant on the subcontractor. And there are kind of key factors that SBA will look to determine whether the prime is unusually reliant on the subcontractor. It involves hiring the subcontractor personnel in mass, especially their key employees, relying on the subcontractor for past performance or experience needed to win the effort, the amount of work or the significance of the work that the subcontractor is going to perform, if the subcontractor is providing a lot of the needed equipment or facilities or other resources to perform the contract, or if the subcontractor is an ineligible incumbent contractor for the opportunity. These are kind of some of the factors, that SBA will consider in determining whether ostensible subcontractor affiliation exists. I think that this slide is important because as you are developing proposals or teaming agreements, subcontracts, perhaps with a prime contractor or with a subcontractor, depending on where you are in the relationship, you need to have this ostensible subcontractor affiliation in the back of your mind so that you can structure your relationships in a way that if you're challenged, it will avoid it. So you can structure your proposals in a way that will help eliminate the risk of finding a ostensible subcontractor affiliation between you and your subcontractor, or if you're a subcontractor, between you and your prime contractor. So this is very important, I think, to keep in mind as well. How to protect against affiliation. Affiliation, as I mentioned at the outset, it's a very important topic to keep in mind. And I don't go through it here to make you an expert on affiliation. I go through it so that when you're developing your relationships, when you're putting agreements together, or when you're talking with business partners or anything like that, you may have the hair on the back of your neck stand up just a little bit and say, what did that Schoonover guy talk about with affiliation, where, newly organized concern, I remember something there, and I really need to keep this in mind, or I need to ask somebody about this. That's really the point in discussing affiliation, not to make you an expert. And so, you can identify it and really mitigate it, on your own, but rather to say, here's the risks and here are some things to keep in mind. Because again, affiliation is a size penalty. If somebody challenges your size, or if SBA is investigating your size, say for socioeconomic eligibility, again, it's going to consider not only your business's size, but also the size of any affiliates that you may have. And it's going to add them together. And that combined size, you and any affiliate, has to fall below the applicable size standard. So I tell folks it's important to understand the risk of affiliation before it becomes an issue. Once SBA is investigating your size, or once your size has been protested, it's kind of too late to fix affiliation for that purpose there. So I tell folks, every year, just kind of do a review, audit your size. The auditing size, using the word audit is a little bit painful, but have somebody review your size and affiliation before you submit your bids or apply for socioeconomic status, and make sure that you don't have any risks of affiliation that you're unaware of, and make sure that you're developing teaming relationships or joint venture relationships in a manner that complies with the requirements to avoid possible affiliation when it comes to those issues as well. And then depending on what, if you audit your size, or if you have somebody review your size or your relationship with another business and they say, yeah, this more than likely not is considered an affiliate, then from that point you can understand the risk of proceeding. Maybe even with an affiliate, your combined size still falls below the size standard. Okay, affiliation is a size penalty. If there's no consequence to size, you might look at that and say, I don't care that I have an affiliate because I'm still a small business. But if that affiliation takes you outside of the realm of a small business, you might look at that and say, okay, now it's decision time. I either need to take steps to fracture this affiliation, or I need to embrace my size, my status is no longer small. And I use the word fracture deliberately because it can oftentimes be painful to eliminate affiliation between businesses. It can mean changing, ownership or management structures or corporate structures or your business relationships. If you are economically dependent on one business, it might mean really restricting business opportunities going forward with that company and really looking elsewhere, which can be a difficult thing to do. You might also consider, in some cases, a mentor-protege relationship. That is, mentors and proteges are exempted from affiliation for the items of assistance that are provided under the mentor-protege agreement. So if you're at risk of affiliation, or if your relationship with a company is pretty close, you might consider entering into a mentor-protege relationship to help kind of protect against a finding of affiliation. Know that you can't enter into a mentor-protege relationship with somebody who already is an affiliate. You have to disclose affiliates to SBA when you are applying for the program. But if you kind of have a relationship that is budding or is close, you might consider a mentor-protege relationship at that point. I've mentioned size protests. A lot of times this is asked, how is affiliation going to come up? Well, a lot of times it might be raised by your competitors or even a contracting officer. If you win a small business set-aside procurement, you might have somebody challenge your small business eligibility. They might say, hey, listen, based on publicly available data, I think they've had contracts that have put them over the size standard. Or based on publicly available information, I think their owner was once an owner of this company who now they're subcontracting with, or I know them, they do so much work with this other business that there's no way, that they fall under the size standard. So know that is a lot of times, your competitors may bring up this information in response to an award, or you may bring this information in response to a competitor winning an award to challenge their size eligibility. And oftentimes, if these protests are successful, the awardee's not going to be considered eligible for that contract. And going forward, they can no longer self-certify if they're found to be other than small under a particular NAICS code. They can no longer self-certify as a small business for that or a smaller size standard. They have to go through a recertification process. Size protests are going to be filed with the contracting officer within 5 business days of the notice of award. Once you find out who the apparent awardee is under the solicitation, your size protest clock is ticking. So if this is something that you would consider, you need to act fast. SBA's area office is going to make the initial size determination, and oftentimes those are appealed to SBA's Office of Hearings and Appeals, who's going to issue the final decision on that. So there is an entire protest process that is out there for size-related issues, and so keep that in mind going forward. Now, with that, we have a few minutes left for questions, but those are kind of the basics of size and affiliation. I know it's a lot of information. I know it's like drinking from a fire hose. Again, the point is just to kind of put this in your mind so that as you're developing relationships or agreements with companies, again, you might have that hair on the back of your neck stand up and say, you know, maybe I ought to have somebody take a look at this, or we ought to consider this in more detail. So we have some time for questions, but I will say, you know, my contact information is on the slide. We also have GovCon Brief available out there as a resource for folks. So if you have any questions moving forward, certainly please feel free to send me an email, give me a call. I'm always happy to discuss. But with that, you know, Yasmin, if we have any questions, I'm happy to field them.
Thank you, Matthew. That was great. Very thorough. Yeah, now's your opportunity to type out any questions that you have. I see one here. It says, I thought that the SBA Mentor Protege program was the only program that could nullify affiliation. Do other MPP agreements, other MPP agreements may result in affiliation?
Well, that's a great question. And so it has to do with the fact that SBA has, you know, kind of the universal mentor protege agreement that works across the government. There are some other agencies who have their own mentor protege programs that are agency specific. DoD most notably has a mentor protege program that has certain DoD contracting benefits to it. Yes, my recollection of the regulations off the top of my head is that it has to be an SBA approved mentor protege agreement to get that benefit of the affiliation exception there. So if you have an agreement, say a DoD agreement, off the top of my head, again, please don't quote me on this, but off the top of my head, that would not necessarily give you the exception to affiliation that an SBA mentor protege agreement would.
Okay, thank you. Doesn't look like we have any other questions, so we'll wrap this up and say thank you so much, Matthew, for a great presentation, and thank you all for participating today. I will be sending the slides over and a copy of the recording, and then hopefully we will see you at a future Apex Accelerator event. Thank you again, Matthew, and we will bring you back next year for a couple more webinars. Thank you again.
Awesome.
All
Thank
right.
you all. Have a great day.
Bye-bye.